GBP USD falls to near 1.3450. Upside appears on fading BoE rate cut bets. Cable extends overnight losses this morning, sliding to near 1.3450 as the market takes the BoE's recent forward guidance to mean an imminent rate cut is off the table. And that's causing some short covering as well as some fresh selling. Overnight lows were at 1.3478. We did see a bounce off of those lows this morning, but really the market's looking to head back down towards them in the session ahead. So far this week, we've had two separate rate cuts priced in by the market for 2023, one in February, and then another one in March, taking the bank rate down to 3.5%. But the problem with that is the market's getting its wires crossed. The BoE's not going to cut rates in March. They won't even cut rates in February if the latest inflation data is anything to go by. Yesterday, we saw the preliminary January CPI report from the UK, showing that inflation actually ticked higher from 10.7% to 10.9%. And that's above the 10.6% that was expected. And what this means is that the BoE have got quite a bit more work to do in order to get inflation down to their 2% target. And it also means that any rate cuts that we do see are going to be much further out along the curve than the market currently expects. Now, it's worth noting that the BoE's remit is to target CPI, not the newer HICP measure, which is used by the ECB and is also used by the Bank of Canada. Last week, the preliminary HICP figure came in at 8.4%, which would suggest that the BoE are actually already pretty much bang on target. But the problem is the weightings within that basket of goods and services are just different. If the BoE had control over the HICP, then sure, they'd probably be pretty happy with where inflation is right now. But because they're targeting CPI, which is a lot more broad, a lot more general, they still have some way to go. And it means that when we look at the BoE's forward guidance, which is telling us that they will, quote, act if necessary to prevent a persistent upwards drift in inflation, it's pretty clear that they're not going to be cutting rates anytime soon. And that's why we're seeing the market correct higher. The market was previously pricing in around a 50% chance of a February rate cut, but that's now down to just 10%. March was also down to 10% from 40%. So we're starting to see the market correct those rate cut bets, which is weighing on the pound. In terms of levels, the next support level for cable is seen at 1.3450, which is also the 2022 low. And it's interesting to note that we've actually had a few failed attempts to break this level over the last couple of weeks. And I think that's due to the fact that the market just does not believe that the BoE are going to be cutting rates anytime soon. Once we get through 1.3450, then the next support level isn't until 1.3250, which is the 2020 low. So there's quite a bit of room for cable to fall. We're also seeing a lot of volatility coming out of the US today, so we could see some sharp moves in the session ahead.